Hello, ladies and gentlemen. Welcome to another episode of Trading for Life. In this episode, I'll break down what happened last week and what to expect in the coming days. The S&P 500 gained 0.5% last week, marking its first weekly increase since mid-February. It closed Friday at 5,667.56, but remains down 4.8% for March and 3.6% year-to-date. Market uncertainty has been driven by monetary policy concerns and the potential impact of tariffs on inflation. However, the Federal Reserve provided some clarity on Wednesday by keeping interest rates unchanged at 4.25% to 4.50%. The Fed still expects 2 rate cuts per year in 2025 and 2026, with one more in 2027. Following the decision, President Donald Trump urged the Fed to cut rates, emphasizing that easing tariffs could help. Meanwhile, New York Fed President John Williams stated that the current restrictive policy remains appropriate, given strong employment and inflation above the 2% target. On the housing front, existing home sales unexpectedly rebounded in February, thanks to increased inventory. National Association of Realtors chief economist Lawrence Yun noted that buyers are slowly returning as mortgage rates remain stable, helping to release pent-up demand. The Trump administration plans to impose reciprocal tariffs starting April 2nd, with President Donald Trump and officials stating, "Whatever they charge us, we'll charge them." They argue that the U.S. has long maintained uniquely low tariffs, with Commerce Secretary Howard Lutnick claiming America has the lowest in the world. However, trade experts doubt this approach. They note that U.S. tariff rates and trade barriers aren't the lowest globally and question the administration's leverage in negotiations. Concerns also include limited benefits for U.S. manufacturing and the risk of moving too fast on a complex issue. While gold has dominated headlines with record intraday highs this year, silver could soon take center stage. One analyst predicts a powerful rally, potentially pushing silver to its highest price ever. Silver is a hidden gem, they say, urging investors to consider it as a way to capitalize on the gold and silver bull markets. The Bank of Mexico will likely cut its benchmark interest rate by 50 basis points at its meeting on March 27th, taking it to 9%, according to a Reuters poll on Friday, amid slowing inflation and a weak outlook for the economy. Of 25 economists surveyed, 23 expect the central bank to deliver a cut of 50 basis points, as it did in February, speeding up a rate-cutting cycle that began last year, when the rate was a record 11.25%. Now let's review some data I want to show you guys. Retail traders have poured a record $8 billion into Tesla stock over the past 2 weeks, the largest 2-week inflow ever, more than double any previous period. This surge suggests that retail investors are calling a bottom in Tesla, betting on a rebound. Canada's Small Business Confidence Index has plunged nearly 60% in just a few months, dropping 10 points below the 2008 financial crisis lows. This sharp decline signals serious economic concerns. As small businesses struggle, consumer demand weakens, and interest rates remain elevated, raising fears that Canada could be heading into a recession. Confidence is now falling faster than it did during the March 2020 lockdowns. Meanwhile, Canadian consumer confidence has hit an all-time low, dropping 15 points below 2008 levels. While the U.S. has also seen a decline, American consumer confidence remains more than 3 times higher than in 2008. Heading into 2025, sentiment had already been slipping, but since the trade war with the U.S. began, it has collapsed to 25, the lowest level on record. With confidence deteriorating at this pace, Canada's economic outlook is growing increasingly uncertain. China's central bank gold reserves hit a record 73.6 million fine troy ounces in February, after adding 160,000 ounces last month, marking the 4th consecutive month of purchases. Over the past 2.5 years, China's gold reserves have surged by 11 million ounces, with gold now making up a record 5.9% of total foreign exchange reserves, or 2,290 tons. with central banks worldwide stockpiling gold. It's clear they're preparing as if a major crisis is looming. Gold has never been hotter. Now let's review S&P 500 heat map for last week. Microsoft 0.69%, Apple up 2.24%, Nvidia 3.26%, Amazon and Google down by approximately 1%. Tesla flat for the week. Sector performance, financials and tech ended the week in the green overall, a mixed market with big tech under pressure, while financials and tech sectors showed resilience. This week's most notable earnings: Monday, Oklo, KB Home; Tuesday, GameStop, Rumble, McCormick, Canadian Solar, Atour Lifestyle; Wednesday, Dollar Tree, Chewy, Petco, Microvision, Rant, Cintas, Jinko Solar; Thursday, Lululemon, Winnebago, Bitfarms, TD Synex; Friday, no major earnings reported. Final charts and wrap-up. Let's take a look at two key charts you need to watch. 1. Yield curve reversal. Historically, when the yield curve moves back above zero, it signals a market downturn or an incoming recession. This is a major red flag for investors. 2007 to 2008 recession pattern. The second chart suggests a similar setup to the 2007 to 2008 recession, raising concerns that history could repeat itself. What do you think? Drop your thoughts in the comments. Down. Key events this week. Monday, Services Manufacturing PMI. Tuesday, Consumer Confidence, New Home Sales, GameStop Earnings. Wednesday, Durable Goods Orders, Dollar Tree Earnings. Thursday, Q4 GDP, Initial Jobless Claims, Pending Home Sales, CoreWeave IPO, Lululemon Earnings. Friday, Core PCE Inflation Data, Consumer Sentiment.